Good morning, everybody. Happy Thursday. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com, and this is my trading game plan. So, as always, we're going to focus on the charts. What are the charts telling us? Markets yesterday were gapping sharply higher. We pushed up early. We then had a midday massive collapse, the S&P 500 dropping 114 points almost in a straight line before recovering and closing slightly green. Now, yesterday we talked about this wedge pattern on the daily chart. We closed below last Friday. We then rallied back up. And yesterday, when we were at the highs, we were back above that key trend line that if we had closed above would have meant the market was back in the range of grinding higher. We didn't close there, folks. We closed back below. So let's dive into the charts. We'll start with the S&P futures here. S&P futures, and by the way, this is yesterday's action. So again, big gap up yesterday. We then ripped higher on the S&P, falling sharply. Look at this drop. Again, up here on the S&P futures, this was near 67.70, and we bottomed out at 66.50. I mean, that's an incredible drop on the S&P. Although, again, once the valves were shut off, the retail buyers bought that dip, and we closed basically flat to positive. S&P was up about 0.4% when it was all said and done. Now, here we have the after hours and overnight action on the futures, and you can see mostly sideways with a little slight incline this morning. A lot of this is on the back of Taiwan Semi's earnings that were reported. They were very, very good, and that's helping lift the semiconductors higher today. Now, we'll get into some individual charts, folks. And again, one of the most interesting charts is the chart of Nvidia from yesterday, because again, we were gapping above potentially a major level to recapture support. And by the end of the day, it was just below where it was going to confirm, meaning the breakdown on the chart was just about to confirm. And then in the last few seconds, they pushed it back up and got it back above, and it did not confirm a breakdown. Amazing chart. We'll look at that in just one second. But let's go to the S&P daily. We're going to start right here. So the kicker here, we know this, right? We went over this yesterday if you've been following me, and I hope most of you guys are tuning in daily because the continued education from day to day is priceless, in my opinion. To confirm a break below this wedge pattern, this is a wedge pattern here. All right, we closed below it on Friday. Remember, that was a break lower, but it's not a confirmed breakdown. Okay, to do that, we have to close below this low. That's before we close above this level, which would be the rescue level. Anything in here is back in the sideways to up chop of the market where we can hit new all-time highs very, very easily. Okay, so the fact of the matter is yesterday, early in the day, we were back above. And it looked like, okay, markets are going to recapture the relative strength in the market, the buy the dippers. They are powerful. And then we saw this massive decline where the S&P dropped all the way down here. But by the end of the day, it came back up, still below the yellow trend line here, but above a closing confirmation breakdown. And so what I said yesterday is, remember this, anything between here and here is a warning zone. It's a yellow alert, essentially a warning flag that the market is vulnerable, but it is not a confirmed breakdown yet. So while vulnerable, it's not like, oh my goodness, this market is done, right? We're not at that point. We're just like, okay, let's keep our wits about us. The market is telling us to be a little careful here, but there's no confirmed breakdown. If we get back above this line, we're back in the green flag of sideways chop where we can go up a little, down a little, up a little, down a little, and chop to the upside. So the watch continues. Now we are up today. Let's watch where we close. If we close above 67.10, we would recapture this trend line. So you have a line in the sand to watch for. Do we close above 67.10? That would be from yesterday's close, basically a 40-point move on the S&P, which, by the way, is not outlandish. That would not be a crazy move. It would be a solid move for the day, but not ridiculous. Very doable for the markets. All right, and same thing on the downside. Any daily close below 65.50 would confirm a breakdown. At that point, I would have no problem based on probability saying we have a confirmed top in the market. Looking at the NASDAQ 100, notice the NASDAQ 100. It had a good day yesterday. up 0.7%, but it did not retest this trend line like the S&P. And so that's a little bit of a concern there for the NASDAQ overall, which is slated to open higher right here, but still has a ways to go to recapture its uptrend or ascending trend line here. Okay, so again, we'll keep this on watch, but the NASDAQ would have to rally quite a bit more today to get back above that level. And then likewise, any close below this level on the QQQ, which is really around 589 or so, that would confirm a breakdown and market top. Okay, so again, one of the things I always strive in these is in these my trading game plans is not only to give you guys my levels, like what am I watching? Someone who's traded for 26 years plus now, almost 27 once we get to next year. This is what I'm watching. This is what will tell me the insights. But I'm also cognizant of making sure I'm giving specific levels because, again, there's a lot of gray area in the market. And I think a lot of people say, oh, we're upgrading this target on this stock or the S&P. And it's like, okay, yeah, but is that there's no level to watch, right? Well, how do I know if that level fails? And the beautiful thing about technical analysis is if done right, you really do know where a bear pattern fails or a bull pattern fails, or a breakdown is confirmed or a breakdown is back into the green zone and can grind higher. And so kind of I get that from everyone because I went through that as a younger trader, really understanding or trying to understand, well, how do I know what's going to happen next? All right, let's go to the dollar. The dollar today is inching a little bit lower, not much. Again, we had this nice little pattern here. And again, a little bit of a pullback right in this range. But ultimately, if we push back up, I still think there's a shot of us getting to about 100.9. Now, to do this, right, the kicker is this. If we get to this level, this would then mean to me the dollar is into major resistance. You can see all these lines going back over here, even these pivot lows in this range. So again, we'll be watching there. That would be an upside move. And I still actually favor general downside in the US dollar. But this is the kicker. Doesn't mean in the near term, if we get some fear, the dollar can't go higher. And I think that's kind of what I'm looking for here is a little reemergence of fear, whether it's trade war related, whether it's economic related, whether it's government shutdown related, whether it's something that we're not even having on our bingo card right now, something in the Middle East or something out of Russia with escalation. We don't know, but keep an eye out. The signals continue to be there. All right, let's get into the 10-year yield. The 10-year yield continues to be weak. It's looking for its second move below this trend line on the weekly chart. This is the big one right here, guys. Do we close on Friday below the low from last week? If we do, it confirms the breakdown, and we should be headed decently lower. And again, that would be if there's fear in the market and people run to the bond market to buy bonds, that would push yields down. So that could also be an indicator that we're going to see that happen, fear rising in the market. We've seen the VIX, by the way. The VIX has popped up over the last week very, very nicely. The question is, does it continue or not? Now, I talked about Nvidia. All right, we talked about Nvidia early on in this trading game plan, and it was just one of the most remarkable displays of not only the power of confirmation or lack thereof, meaning in this case it didn't confirm, but it also shows you that institutions are very cognizant of this. They knew if we closed below that level, it would trigger a sell frenzy in Nvidia. And so let's look at this. So yesterday or 2 days ago, we closed below this bigger wedge pattern, right? So this long-term trend line going back to the bull market of 2021, the high here in 2024, and then lo and behold, we tagged it right here, and that's where you got your sell. Then we bounced, and then we closed below, okay? So as soon as you close below a major trend line, and this one goes back to the April 7th low, now you're on watch for a confirmed breakdown. Now, we opened yesterday back above the line. And I even said it in this game plan. I was like, well, we got to watch this, but we're back above this line. Maybe they just negate the break below and it gets saved right away. And it looked like that was going to happen. And then all of a sudden, we had this massive sell on Nvidia later in the day with the markets. And it came all the way down to 177.35. But then just into the end of the day, look at this, guys. Look, here's your low from the previous day right here. And just at the end of the day, they closed it back above. I mean, that is, if you're a technician like me, that's just like, holy cow. Like, talk about being saved by the skin of your chinny chin chin or whatever you want to say here. I mean, that is incredible. Absolutely incredible to see. And ultimately, the price is the king, right? I always say price is truth. So it doesn't matter if they're saving it. It doesn't matter if it's just natural occurrences. Where did price close? Did it confirm? It did not. So again, it's in the warning zone, but it did not confirm a breakdown. Lo and behold, what's happening to Nvidia today? It's up. It's up a couple dollars on the back of Taiwan semi earnings. All right. Speaking of Taiwan semi, up at 312 in the pre-market. We can see again boosted on earnings this morning. Notice it's not a big move on earnings because this thing was already trading at all-time highs. I mean, look at this move. Absolutely incredible. Now, on a trader's basis, on a swing trade basis, I am monitoring this area here. Okay. So you see this trend line going back to July, and then this secondary hit in July, and then this recent hit. So today is a day trade. I am going to be potentially looking to short a Pierce of 315 on Taiwan semi. All right. That also could be a good swing trading opportunity as well. So we'll watch that. The only thing that has me on a swing trade basis a little bit skeptical is the potential for a measured move, which we'll go over in gold in just a second. But a measured move basically says the first move to the high, where then you get middle bear, you get consolidation, and then the second move usually is equal. Okay, so what you do is you take this low to this first high, and then you put it to this low here before that next move. And if we do that, it tells us we could go on a swing trade basis as high as around 338. So again, I like this as a day trade at 315. As a swing trade, maybe a nibble, but more than anything, I'd really attack this if it got to 338 over the next week or two in the markets, just because, again, that would be a measured move. And just to replicate, just to teach you guys, measured moves, so you have an up move like this, right? And then you go sideways to lower, which is a bull flag. And then the idea is from this distance to this distance, it should replicate from here to, wherever that would be, somewhere up here, right? This same distance should replicate. And that's what a measured move is. And it's specific to these type of patterns where you have this long band of up move, then consolidation, and then continuation to the upside. So just something to keep in mind here on the TSM chart. Now, TSM is certainly keeping the semiconductors rallying today, at least for now. We'll see how things are later today. United Airlines reported earnings. The stock is basically flat. You can see it kind of chopped initially yesterday after hours. The stock was down. Now it's come basically back to the flat line. They did miss on revenue, but in all fairness, again, it's not an earth-shattering report, right? I mean, it's solid. They beat on earnings. Their guidance was pretty good, but they did miss on revenue, and markets are kind of looking past this. JB Hunt, which is a transportation stock, they've been kind of mired in this longer beaten down path because shipping has been rough. Trucking, all that stuff has been in a recession, you could argue. They did report good earnings, and that stock is rallying. This is a big enough move to get me interested for a day trading opportunity. My day trade is very simple here. There's a pivot low here, pivot low right here, and a pivot high right there. We put that across. I'll be watching the 163 to 165 level right through here. That will be my zone for a potential day trade short. Now, I want to show you guys something amazing on gold. Now, it's not just the measured move. I discovered something even more intriguing on the gold chart here. So first and foremost, let's look at gold here. Gold today continues to go up. Remember, it confirmed outside of the parallel 2 days ago. It rallied, continued. Remember, once you confirm, it basically says you're going higher. And now that lower band, which was resistance and we confirmed above, it's now support. So we're using the same metrics to the upside as we use to the downside. Always remember that, guys, is that human psychology works both ways, greed and fear, right? And so you confirm above, chances are you're going higher until the next level. But this is what I want to show you here, guys. So you have the same sort of factoring here that we just looked at on Taiwan Semi, where you have this up move here, right? Then you have this basic consolidation, and then you have this secondary up move. And so what I like to do here is I say, okay, well, if we take this up move here, right, and we do this measurement, we go up there, right? So there's your beginning of your bull move up to your high. Then you have baseline of consolidation. If we drag this over here, we get basically, we're right at a measured move. So this is an interesting level here, right around 42.35 to 42.50. But I want to show you one more thing on this. And this was really an eyesore. All right. So you guys know me. I'm fascinated by history, because if you want to learn about human nature, you look at history, because we don't change. Humans don't change. Greed and fear was the same 1,000 years ago as it is today. Now, technology changes, but our underlying DNA is not changing, right? That's just not the way it works. So if we look at this, this is a chart of the basically the gold trade right now. Here's your move up. This is the weekly chart. Weekly up, sideways, and this is your measured move up here, right? So we have that measured move. Now, the one thing that stuck out to me is I was like, okay, well, how does this reflect in the 1970s into 1980? Like, what kind of move did we see? And one of the things I found out here, look at this, guys. Look at how many up candles in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9. So the last move, and look, by the way, look at this, guys. You want to see something cool? Up move, consolidation, up move. Up move in 1970s, consolidation, up move. It's virtually repeating the 1970s move. Now, percentage-wise, we technically could have a mile to go. I mean, percentage-wise, granted, gold was much cheaper back then. So, this basically gold, this last move was basically doubled gold price. It went from $400 to $800. But what I'm noticing here is, look at this. We're on our 9th week up on gold now. And if we go over here, look at this, right? 1, 2, 3, 4, 5, 6, 7, 8, and 9. This was your 9th week, and this is your 9th week. Now, zoom out. The 10th week, we saw a gap up in 1980, January of 1980, and a major reversal engulfing candle. Now, I'm not saying that's going to happen, right? I mean, your guess is as good as mine, but I do think there's something to be said for 9 straight weeks up and 9 straight weeks up. Let's see what happens next week. How high do we go here on gold? Gold currently, again, trading around $4,247. How high do we go this week? And what happens next week? And by the way, this really was a cycle top. I still, and listen, maybe I should just trust the charts, but I still don't think we're at a cycle high yet. I just think we're due for a pullback. And the reason I don't think we're at a cycle high is because fundamentally things, I mean, yes, inflation was going on crazy back then, but the mere fact that there's nothing being done to control inflation now, and that government spending, there's no sign of that stalling or slowing down. To me, it just means that, yeah, sure, we probably get a decent pullback in gold at some point, but the odds of a major pullback are somewhat unlikely, and I still think we're going higher after a pullback. But interesting, nine weeks up in 1979 into 1980, and now we're on our 9th week, and in 1980, we had a huge reversal down in gold there to begin a down move. All right, I love bringing that to your attention, guys. So cool. All right, silver. Let's go to silver here. Let's bring up silver. Now, silver confirmed above that key level finally. So here was your close above. Didn't confirm, confirmed. Okay, today we're basically flatlining. If we continue to rally, there's a beautiful parallel, and that target would be around $60 to $62. So that is a possibility, folks. Again, it's extended. We have basically the same amount of up weeks that we do in gold. So you could be due for consolidation. But ultimately, this is telling me we could be headed higher on silver. All right, next up, let's take a look at oil. Then we'll get into Bitcoin after natural gas. Oil continues to be weak, still unconfirmed. We haven't had a close below here, so let's monitor that. But if we go down into this, or if we confirm, we should head down to about the $55 level. Next up, let's take a look at natural gas. And then again, Bitcoin. Bitcoin's fascinating, by the way. I got to say, Bitcoin is really, really interesting. Natural gas isn't so interesting right now. We're still in the midst of this bigger parallel channel. You can see again, these two wedge pattern lines met right here. We closed above, we never confirmed, and it did reject price. We'll have a minor support line at 332. But again, to me, there's no trade here. It's just, that's a support level that I'll just watch and see how price behaves at that point. Lastly, we got to look at Bitcoin, guys. What is going on with Bitcoin? What do I mean? Well, basically, the stock market was up yesterday. The stock market's up today, and Bitcoin can't get off the floor. All right. It's like been a fighter that got punched out and it's down for the count. Now, listen, it's not to say it can't rise like the Phoenix, right? And Bitcoin has a history of doing that. But it is concerning to me as a technician that we've seen bounces in the stock market off of the Friday low and the crypto crash, right? And Bitcoin bounced a little bit and then it went right back down to 110. And we know 110 is major support. But one thing that concerns me is look, 1, 2, 3, 4, 5, 6, 7. Out of 7 trading days, 6 have hit this line intraday. Now it has held, so in general, we give the benefit of the doubt, but it just starts to be a little concerning as we know that in technical analysis, the more you hit the line, the weaker it becomes. All right. So again, imagine if the stock market, let's say, is up today, but then sells on Friday. Does then Bitcoin just dump out and start breaking? Because if it breaks, you're going, number one, your first target's probably around here, around 98, but then you're really headed down probably as low as 94 to 95 right here. All right, so let's keep an eye on this. This, again, is a little concerning that Bitcoin has not had a better bounce off of the lows when the stock market has bounced. All right, now maybe all the money's getting sucked up by gold. I honestly don't know. I think that's always a possibility, right? Is that investors are like, oh, screw Bitcoin right now. Let's go into gold. And maybe there'll be some money rotation back out when gold pulls back. Maybe same thing with the stock market. But we didn't see that last Friday. Bitcoin dropped precipitously, as did the stock market. So just keep that in mind. All right. I have to get to my trading room, guys. But as always, I hope you enjoyed this episode of my trading game plan. I've got my trades ready to go here into the open. We'll watch and see where this market goes. Does it close back above that ascending lower trend line of the wedge pattern on the S&P? If it does, remember, it's back in the green zone and technically safe. If it doesn't, it's in the yellow zone. And if it somehow dumps out big today, then we look for a confirmed breakdown. Have a great rest of your day, guys. As always, you're awesome. Thank you so much for tuning in. I'll talk to you soon. Take care.